Hi there, I'm thrilled to be joined by Alain Marcus, the Head of Asset Management at First Abu Dhabi Bank. They are one of the leading banks in the UAE. Alain, thanks a lot for your time.
Nice to be here, James. Good afternoon.
With interest rates so low, investors are searching for yield, they're searching for return. Lots of talk about the hunt for yield. Can you divulge a bit more in terms of where we could find that?
Unprecedentedly low interest rates, in fact almost at zero. We see the outlook for interest rates to remain very, very low. And if you look at the effects of inflation, where typically 2% or 3% of your money is eroded away every year in relation to the cost of goods and services, you need to be invested. And at the moment, the equity markets have given us some fabulous returns. We do expect this trend to continue, although at the moment, as we speak today, we have the effects of the coronavirus back with us again. At some point in the future, we do see the bond market and fixed income doing very, very well as well, once we've fully priced in those rate hikes, which are expected to come later in 2023. So positioning is everything. And the sectors that we think are going to do very well are the post-pandemic recovery sectors, which we covered in the GIO, of course. And at the same time, we do see opportunities in technology, particularly innovation, which will continue to drive returns for investors in the future.
Interesting. You mentioned fixed income markets, you perceive them to do very well in the future. The equity markets are being just steaming on, going really strong. Equities versus bonds, can you elaborate a bit more?
So at the moment, we think the mix should be about 60% into equities, 40% into bonds, which would include alternative strategies. At the same time, the markets are more fearful of the interest rate rises first, and once that settles down, which we think will be spring or summer of next year, a lot of value will be in the bond market, and it might be worth rotating some of your portfolio towards that side of things.
Interesting. Going back to the global investment outlook in the third quarter of this year, you mentioned a lot about private markets. So for the average investor, the person who doesn't know what that means, could you elaborate a bit more in terms of private markets and the benefits?
So interesting statistic here. If you look at high yield bonds, which is traditionally the riskier asset class of fixed income, just 3 or 4 years ago, you were getting between 7 and 10%, typically in a lot of the high yield names around the world. The risk-free rate within the markets, in other words, if you were putting your money into deposits, was somewhere in the order of 2 to 3%. And private markets, all these alternative strategies, were giving double-digit growth. Now, if you look at the way the bond market has behaved, we've seen US high-yield bonds now go below 4%. Interest rates are almost at 0%, but private markets still offer those double-digit returns, and it's suddenly become a very interesting opportunity, particularly for the bigger players, to really diversify, and we see that diversification taking place in private banking as well.
And being a bit cheeky, if you were me, you're an investor, you're going to be investing your money in 2022 with all this uncertainty, the volatility, what would you be investing into in terms of asset classes?
So start with equities, keep the 60-40 split as it is at the moment. Look for the opportunities once the central banks have guided on where interest rates are going into the future, and obviously the investment strategy team will be doing that. Then to take a look at bonds, and for those clients who are in a more risk profile, looking at alternatives which are less liquid markets, those returns look very juicy and attractive.
You mentioned COVID-19. Taking that into consideration, knowing that now, what would have you done differently compared to last year, Alain?
That's an interesting question. I think everybody was very focused on the stock market. It just goes to show you that being diversified in your investments is ever more important. We could have technically been more invested on the fixed income side, but of course the returns on equities were very, very good. It's a hindsight thing to say, but then we've had a very V-shaped recovery in terms of the way the equity market has behaved, so it turned out to be the right strategy anyway. In terms of the alpha or the generation of returns that you get, I think it still remains best to be invested in equities rather than just bonds.
Okay, interesting. And we've just had COP26. Lots of talk about sustainable finance, green bonds, green loans, ESG. Explain more about ESG. I mean, do you see it's going to be continuing in the GCC?
It's rapidly moving everywhere, and I think the COP26, soon to be the COP29 here in the UAE, I think it's going to be the centre of attention. Obviously in Abu Dhabi, it's a big feature for us. The way investors are perceiving investments all around the world, it's certainly an angle as well as a lens to consider, and I think it's coming here very fast and will be adapted across all our businesses in time.
Perfect. Alain Marcus, thank you so much for your time. Great seeing you.
Thank you.
Thank you.
Thanks, James.